I just invested in my 18th startup company in the last 12 months, and in this video, I'm gonna share with you a little bit about that business, but more importantly, I'm gonna share how I came up with this investment decision and build my investment thesis for any startup company. I'm gonna walk through the investment terms, I'm gonna share the problem solution, how you evaluate traction, the market opportunity, and what kind of entrepreneurial insight that you can bring before making an investment. Now, if you guys are new here to the channel, make sure you subscribe and invest in that like button. I would really appreciate it. Without further ado, let's go ahead and get right into the video. The company I invested in is called Place Technology, and this is basically a platform that connects the flow of financial and operational data to produce real-time agile forecast. We'll get into the company in just a little bit. Let's talk about the investment terms. It was a price round on WeFunder, great online platform, and an open public offering, Regulation CF. And what it means by having a price round, there is a set valuation, meaning a price per share determined by the CEO and the founding team when they go out and raise funding. It was a 12.5 million pre-money valuation, which basically means that before any investment has been raised, the valuation is set at $12.5 million for the entire business, and the target allocation for the raise was $2.5 million. So all said and done, the company will be valued at $15 million post money. Now, about $750,000 is allocated to be raised on WeFunder. So of this 2.5 million, just a small fraction of it will be actually open to the public, to professional as well as non-professional, non-accredited investors. If you're wondering what is the difference between accredited and non-accredited investors, how do you become an accredited or a professional investor? I actually did a video in detail on how you become an accredited investor. I'll make sure it is linked up here as well as in the description down below. Let's talk about the problem that this solution is actually trying to solve. Oh, and before that, prior funding was $3.6 million. So there's obviously some investment already in the company and some proven traction that we'll talk about. Let's talk about the problem that this business is trying to solve.
We are a financial forecasting and business planning tool. We built the company based off of solving needs that we had in our last company. So we're really passionate about what we're doing, and my job is to wrangle the troops and get us there. My knowledge of both how do you build a successful Salesforce-based software company, along with how do you produce these financial models, how do you know if they're right, how do you validate them, and how do you use them to run the business, puts me in a really unique position to do what we're doing.
And as a business owner, I can feel this as well. If you're a business owner, this will probably empathize with you. Basically, the problem is that companies need to produce accurate and flexible financial forecasts. Makes a lot of sense. If you run a business, you need to know how much money you're going to be making, how much money you're going to be spending. And ideally, what you make is more than what you spend, or you're going to have a gap. And if you have a gap, you might need to raise additional financing. And understanding these different levers that you have from the finance side of the business is extremely, extremely important. And this is a big problem because you need to have that information quickly and reliably. It takes a lot of time to gather all this data from different sources and to feed this into one location. It can take weeks, it can take months. I know for me, on a quarterly basis, I do have our bookkeeper go through everything, and I do have a pretty structured understanding of where all the data sits, but that might be too slow for a lot of businesses, and oftentimes for myself included with a small business, I want to have this information at my fingertips, and I want to be able to share and really collaborate with other people in the company on what these financial forecasts actually look like. So the ability to have this financial agility actually threatens a company's competitive advantage if you're too slow to forecast your finances. And so this is a massive problem that literally every single business faces. And if you're a really large company, this could be the difference between taking over a market and literally billions of dollars of revenue or market capitalization that can be lost just because your financial forecasts are slow. So huge problem. Literally every single business faces this in one capacity or another. And this company has created a solution called Place CPM. And this solution literally connects the flow of financial and operational data to produce real-time forecasts. So that way, if you're trying to figure out how much money are we gonna make, how much money are we gonna spend, you can do that in real time. Agile brings all the data together, and it actually eliminates the administrative task of joining and gathering all this information. I know in a smaller company like ours, I'm the one, the CEO, who's actually doing a lot of this stuff, which can be extremely frustrating because I know that someone else can either be doing this or software can actually do this for me much more quickly and much more efficiently. And the solution is built on Salesforce. The product ranges from $250 a month all the way up to $1,750 per month, which is about $17,000 per year. Now, that's awesome because that's a B2B software as a service, higher price point item, which means you can build out a sales team and you can have a lot more interesting unit economics from a business perspective, as well as me, the investor, so that I can invest in a business that is pretty measurable to see grow in the future. And when we think about the market size, the target companies that this business is going after are anywhere from 20 employees to 1,000 team members. And so I luckily had the opportunity to hear from the CEO directly and actually interview him on an investor panel, and to hear about his vision for the company. It was really, really exciting. Here's a little snippet of that.
We focus on combining the data that you need in order to produce the accurate financials, and then also the technology that allows you to take that data, do scenario planning, do forecasting, do cash modeling, and then also make that data and that output available to not only the finance team, but executives across the organization.
As you heard right there, big market, big opportunity, solving a massive problem that almost all businesses face. And really the total addressable market here, this is something that you want to look at as being really, really massive and growing over time, is $2.5 billion just on the Salesforce platform alone. And Salesforce is projecting to grow 4x over the next 3 to 5 years. So you can imagine a $10 billion total addressable market. And oftentimes when you look at investment opportunities and you hear TAM or different things like that, really what you're looking at is what is the total addressable market and what is a smaller circle within that this company can actually initially penetrate. And obviously they're starting with those 20 to 1,000 team members, and that's really where they're trying to take off. So they started the company in 2018. Anytime you're evaluating traction, what you want to see is that the company is building upon what they did in the prior month, quarter, and year. So there's like this compounding snowball effect. You don't want to have linear growth. You want to have exponential growth. So if the company launched a product in 2018, you expect initial traction in 2019, 2020, and now you start to see a multiplying effect happening of traction, the product adoption, revenue, things like that. So the product is already in the market, 40 customers, about 350,000 in ARR. ARR is simply short for annual recurring revenue. We talked about the business model being a subscription at $250 to $1,750 per month. So on an annualized basis, to have $17,000 per month on the bigger clients, and they have an active pipeline that they're developing. Very, very low churn rate. I believe the churn was next to zero, so all their customers are obviously happy in the short run. And as you start to build out more traction in the years that follow, this company's ability to raise money will really come on how consistent they're able to develop this pipeline and keep customers engaged, having a low retention rate. That's really, really important. Now, one thing that I always look at as ideally the most important thing in a startup company is the team. And being able to interview Brandon Metcalf was actually a really great experience. And as a CEO, he's a serial entrepreneur. He's built a company on the Salesforce platform before it's acquired. And he's been through this several times as not only an entrepreneur, but also an investor. He's already raised capital. He has an angel network. He can raise funds. And it's really exciting to see a serial entrepreneur in the tech space, B2B, software as a service. I'm throwing around a lot of jumble, not a lot of jumble, but a lot of buzzwords, only because these actually matter. So B2B is business to business, SaaS is software as a service, built on the Salesforce platform. So to see an entrepreneur who's kind of been in there, done that, talks the lingo is very, very important. And also starting a company to solve a problem that they actually face. This is a problem that I personally experience, and I know other entrepreneurs experience, and that really comes into play, the entrepreneurial insight. So this is something that you always want to look at when you invest in a company is, do I understand the problem and the solution that this company is trying to address? Do I understand the market? And do I have something that I can bring to the table as some kind of like an insight as an entrepreneur, as an investor, as a consumer of the product that you can really stand behind and have conviction that this company has a chance at being really massive and really growing and taking over some segment of a market. Because if you don't have any conviction, you don't have any entrepreneurial insight, it's really hard to make an investment because you don't really know. You're basically taking a gamble, and gambling is not good. Of course, all investment has risks, so make sure you do your due diligence before making any investment decision. Disclaimer somewhere on the screen. So make sure you do your investment due diligence, but really having that personal experience and personal conviction makes it a lot more interesting, and why you have like a bullish thesis on a specific company. Obviously, there's administrative time that this company is solving. There is this, slow reporting, but I think most importantly, it's that agility, that competitive advantage, being able to see a financial forecast in pretty much real time or a lot faster than weeks or months to prepare. You can make business decisions much more quickly, and that makes it a lot more interesting to get involved behind this company. And of course, course, I have a bonus right here as to why invest in the business. And in speaking with the CEO, Brandon, he said there are 3 reasons why you want to invest in this company or any company. And I'm glad you made it to the end of this video. Make sure you destroy the like button with that investment of yours. Invest in that like button. The first thing that he says of why you should invest is the team understands the market. We already talked about this, solving your own problem. You know, it'd be great for me to be able to work in some way on a problem like this that I actually understand. Even better, the CEO has been there, done that, experienced the problem. So the team understands the market that they are in and that they are selling to and the problem that they're trying to solve. It's also a highly rated product. Very, very little churn. People love the product. And at the end of the day, if people love the product, there's going to be some sort of organic word of mouth. And when people love a product, it makes marketing the product so much easier because it's easier to sell a product that people already like. I mean, that's really the best kind of marketing when it sells itself. So to have that positive net promoter score, high word of mouth rate of growth is very, very exciting. And the third reason why you should invest is the experienced team. So notice those are 2 different things actually. The first one is that the team understands the market. And the third point is that the team has experience developing products and services in a business entrepreneurial capacity, and even better if they're doing it in a market that they've already done. So if you're looking at investing in a company that's in the medical device space, if the team has experience not only in medical devices, but building companies in that space, in software, B2B, B2C, whatever it is, having experience in that specific domain. If you're trying to build an EV company, electric vehicle, having experience building is very, very important in that specific domain. So these are some of the things that you need to look for when you're considering making an investment decision. And I hope that by sharing an overview of this company and my thought process and entrepreneurial insight, shed some light for you. If you guys want to see a more detailed video of how to invest in startups and different things that you need to pay attention to, I have a lot of videos on this channel, so make sure you subscribe, like this video. Make sure you follow me on social media. I share a behind the scenes look of what it's like building a global technology and media company that is MySwimPro. I hope to see you guys there. Wish you the very best and keep hustling.